Donald Trump and the White House are tweeting, and suddenly the world is turned upside down. Yes, the markets are booming, especially the Asian market. The forerunners for Europe and, of course, the USA have set the pace with 2 points. Is FOMO coming back now, and are we seeing new all-time highs, or is this a risk rally? And it could go lower than we expect. I'll break down and clarify all of this today. And of course, we'll take a closer look at the charts. Where are the exit points? Where could you potentially re-enter? All of this information. So make sure to stay tuned until the end. Feel free to hit the subscribe button so you don't miss anything when it comes to crypto and more topics. I'll see you right after the intro. First of all, as always, we'll start with the latest on-chain data. And for those who've been watching a bit, I've actually collected some screenshots. There we can see that on October 21st, 2021, we had 2.853 million Bitcoin on the public market. And of course, anyone who, like me, checks the on-chain data daily will suddenly notice a deviation that's quite unusual. Here we see, for example, 2.86. Even though we're almost at the lowest point again, or back at the lowest point like on the 15th of October, which is really what we've been seeing here for quite some time now. So in the end, that means we've had almost 10,000 Bitcoin added. But we also have to cut Glassnode some slack here because exchanges, of course, have all sorts of random wallet addresses. And that's why this was adjusted again. So it was possible once again to assign a wallet address to an exchange. For this reason, this was corrected retroactively during this whole wave that we see here. In the end, it doesn't make any difference to the price. I just wanted to explain it in case anyone else notices it, not just me. So as we can see, 6,820 Bitcoin were accumulated yesterday. But we had a very, very low volume. 31.6 billion is very, very low for Bitcoin. But don't read too much into it. There's a big warning signal coming your way anyway. Then we have additional bets of just under 2,087 Bitcoin that were added. We have higher leverage. Ratio, that's not a small amount, by the way. There's more betting, more risk. And we can see that the long dominance has increased massively. So, of course, the question often comes up, is FOMO coming back now? That could actually happen if we see that we have 0.01. But this FOMO is associated with a lot of risk this time. Of course, I want to explain that to you. Today, we're already at 116,000. Yesterday, the closing price was almost $3,000 higher at $114,500. That was already quite strong. We're also seeing a relatively strong price increase in Ethereum. The long dominance has also increased massively. We can also see the bets here. More bets, more risk is being taken. And at the same time, the volume here was also very, very low. 32.3 billion, but still relatively strong for Ethereum. You have to give it credit for that. Yes, 149 or almost 150,000 units were accumulated. That's a big number as well. We can see that the strong hands have actually sold off some of their positions. That's because the accumulation ratio has dropped a bit. Not quite as bad as it could be, but you should definitely make sure to keep a close eye on it over the next few days just to be safe. Yes, we may have had a brief outflow on Ethereum on Friday. We now have relatively bullish ones. On-chain data seen, and I assume it will also be noticeable today at the ETF, not only from the on-chain database, but of course also from the news that we will be covering today. There will be a lot of additional purchases and probably many new buyers as well, which is something you should definitely watch out for because it can be risky. For Bitcoin, there was an inflow of about 90.6 million. Not extremely bullish either, but as I said, today's news will pretty much change everything. At least, though, it brought us back into the neutral zone yesterday at 42 points. Now the question arises, are we heading there towards greed, a FOMO mood? At the moment, it's actually possible. Just looking at the market, for example, in Asia, the Nikkei has risen by over 2 points, up 2.32%. That's already very significant, so you definitely need to be careful. Then in Europe, it's likely that we'll see an increase today as well. We do have bad news from the economy, from Germany, so to speak. Porsche, for example, has reported an almost €1 billion quarterly loss. That's pretty brutal. A significant setback. And you really don't see an incredibly bright or promising future ahead there. So it's going to be relatively difficult. Well, in the end, the alcohol season is still a long way off, but that could still provide a boost. That's something to keep an eye on over the next 2 or 3 days because we've seen almost a 4% increase in new market capitalization. So we're not there yet. We were just over 4%. 0.04 trillion, if I remember correctly. Now it's a bit lower again. But we can see that all the coins are already turning around. We're in the green everywhere here, at least among the top 10. That's really, really impressive what's happening right now. Quick note in between, very, very important. A new savings plan video is online on the dashboard. Which stocks, which commodities, and of course which crypto you should currently buy, including the reasoning, is on the dashboard there for those who missed it. There are now new changes in the dashboard. You can now enable push notifications under your profile. Then you can do it here, manage notifications. Then you can choose whether you want to be notified about the orders and trades we make via Telegram or also by email. Do I want a complete breakdown when I place new orders? We do it together, so a summary. But you can also have it in detail. Now you can select everything yourself with push notifications, and you can even, if you want, turn the whole thing into an app, a browser app. We'll get to that and explain it to you in a bit more detail. But in any case, it's already pretty cool for you. And now we've also listed the partners because that question keeps coming up, especially in our Telegram group. You should definitely join if you want to connect with over 4,000 traders. Come join us and you don't have to worry. No question gets laughed at, everything is taken seriously. A very serious community that has only one thing in mind, to learn to trade professionally and sustainably. So feel free to stop by and join in. Yes, so BitCap, Bitpanda, Bybit, EU, Coinbase, and of course Femex, as well as hardware wallets from Bitbox and Ledger, and also from TradingView. You can click in there anytime. And of course, by doing so, you also support this channel. Yes, and who would have thought? October is currently green, up 1.21%. Of course, not the kind of green we're used to seeing here. But that could actually still change with the FOMO mood that might arise. It kind of depends. So theoretically, with the news we have today, October should end in the green. But unfortunately, that could also change a bit in November. We'll take a look at that in a moment. If you look at the liquidity in the market, and that's very important for us because we're currently keeping an eye on where we stand, we're just under $116,000. We don't have that much liquidity left in the upper ranges here, just about $1 billion at $118,500. That's not a huge amount. There's a somewhat hyperbolic curve, and it's not set up very smoothly here with the orders. To put it plainly, it's just not that attractive to move upward right now. But there's a caveat which I'll get to at the end. Below the liquidity is actually interesting because a lot of longs are opening up. A lot of people are positioning themselves. Right now, you can see here at 112,500, there's someone going in with 68 million using 100 times leverage. So this person now believes in Donald Trump's words. And you can see how psychologically manipulable the masses are. That's really crazy. And right now, you can see up to $113,500. Yeah, let's say $113,000. We're roughly at the same level as in the upper ranks, $1 billion. And now there are two possibilities where even the market makers, possibly today, if they don't do it, in my opinion, they're a bit, well, I won't say anything about that, but actually the optimal logic right now would be to briefly give it some power into the price, to place buy orders, to create momentum in order to collect the billion up here, roughly at $118,000. After that, it should actually fall back and pick up the lower orders, especially at least here in this region around $112,000, and then really push upwards with a lot of force and break through the resistance. That's how it would be readable from the current perspective. Personally, I don't think that's so bad at all. But we'll also take a look at the order book. We'll pull up the order book here and take a look right away. Currently, and this is also very interesting, as soon as the news came out, there was a relatively strong flattening at the resistance of $115,000. It then broke through at the top, picked up the minimum here, broke through, and went upwards. Here too, the orders were pulled back relatively quickly at $116,000. And now the next major resistance is at $120,000. It's not a massive one, but it's a good one, you could say. And if we look, yes, the 125 has also decreased a little, just minimally. And the 130, that one is hiding. There we are at 375 units. That's already a very, very strong resistance. But be careful, the danger often doesn't come from above, but from below. We still don't really have much support here. When I look at the whole thing, 136, yes, that's a bit tough. So it's relatively easy to break through with the force I mentioned earlier. Then here we have $100,000. That's a good support, but up here, something is missing. We see that this 112, which we see in the liquidity, actually doesn't have any support here yet. So that's dangerous. That could mean we could fall even lower. That's just the reason for it this time. Why is this actually happening, primarily speaking? It is what it is. There's really nothing else to say, but the markets are currently being driven by tweets and statements from Donald Trump. And of course, it's not just him, but also his team. I'm talking about an entire staff team here. It used to be Elon Musk. Some of you might still remember back in 2023, 2022. Around that time, Elon Musk was kind of the one driving the market. Today, you could say it's Trump and his team. It's also very interesting how different the news is from the West's perspective compared to the East. So if you look at the Ministry of Commerce in the People's Republic, meaning China, there isn't even really any news about it. Of course, you have to put it into perspective because as important as it was made out to be here, in China it was actually only discussed by the vice premier. And well, that's just how it is. It's neither noticed nor is it depressing. It's, how should I put it? It's just not the full authority. But there are still a few signs that are interesting and exciting. The whole report here, which I think is good from Reuters, is fueling risk rallies. They are emphasizing it correctly because you have to imagine there's a kind of ceasefire until the 10th. November has been agreed upon. In terms of the tariff war, Donald Trump had previously said something else. And from the first, 100% tariffs will apply again, even though it was actually agreed to wait until the 10th. A solution is supposed to be found by November 10th. We've seen this several times now. I think the gentlemen from the foreign ministries in the West and of course the East have sat together 5 times. And so far they haven't really come up with any solutions. But in the meantime, there have been further declarations of war, trade war declarations, and it was about port fees. I showed you that once too, didn't I? And explained what that means. In some cases, $50 per ton was charged, and so on. That put a massive strain on things. And yes, what has happened now? Maybe over the whole thing? You can't just look at what Reuters writes, but there's actually also ChinaDaily.com. That's also a very, very good site where you can read through everything a bit, and it's written in a rather neutral way, neither left nor right. Personally, I also find that very interesting. And primarily, it's actually about these are the talks where things are in a relatively tense phase. You have to look at that too. Then, after some time, the Chinese representatives joined in the ongoing discussion and said, "We are ready and willing to negotiate, but we do not want to be mocked, treated badly, lied to, or cheated in any way." So ultimately, it is primarily about how the United States of America, or the USA, has historically dealt with, responded to, and engaged with the values, principles, and traditions of the East. It's very, very important that you understand this. So then there was always the additional point. The conversation here also included, among other things, the issue of port fees, which of course had to be implemented. Then China also said, fine, then we'll just restrict the export of rare earths. So less for the USA, more for the rest of the world, something along those lines. And then, of course, Donald Trump steps in, right? And now, of course, there was hope. When people said, yes, we'll find a way, we'll do something like a ceasefire on November 10th. And people hope, or rather economists and market observers, they really hope there will be an extension because it's unrealistic to reach an agreement by November 10th. To reach an agreement by November 10th, we just saw it. Trump broke with Canada again. He broke with them again. Maybe you remember. He also said Canada is like the USA, we belong together and blah, 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 brotherly and so on. In the end, that didn't amount to anything. And China is a whole different ballgame compared to Canada. And I think that's really dangerous. And primarily, as former US Treasury Secretary Robert Rubin also says, we need to have realistic expectations. The markets are currently too euphoric. And he's afraid of a risk rally, that the whole thing could end in a massive crash if it continues like this. We should find solutions. We should build an open trading system, especially for the future ideology of AI. I absolutely agree with that. It will, of course, be very, very important. The article itself from China deliberately communicates a sense of relaxation, emphasizing dialogue and cooperation. At the same time, however, a sense of mistrust toward the USA remains noticeable, and of course, that shouldn't be changed. And yes, in the short term, this can certainly provide a temporary consensus and, among other things, support risk appetite in the markets. Yes, that could be the case, and Asian trade could also be positively affected, but the risk is very high. The return of tariffs, the tariff spiral, and new supply chain disruptions. That is our biggest risk. The opportunities for political relaxation and positive impulses for commodities, especially in Asian markets or actually in global trade, could become quite interesting here. So feel free to take a look. It's a great report and stands out a bit from the rest. But again, if nothing is communicated here, on the side of China, it's, to put it bluntly, the issue is not yet being taken seriously. Or it's not really final yet. That's where the East differs from the West. The West likes to communicate in advance. Send out signals. That's something China doesn't do. You have to be a bit careful with that. At the same time, by the way, there are also voices currently saying we're afraid. There was an insider, but I only know this from one source, so I wouldn't bet on it, but I just wanted to mention it so that it's been heard. Insiders are coming forward and saying that the Fed might not even be targeting a rate cut because they lack data and facts from Washington to make a decision. I can hardly imagine that this will actually happen. I'm strongly expecting a rate cut, but if that's true, then I'd have a new source. That's something I'll definitely be keeping an eye on in the future. Feel free to share your opinion below about how you currently see this circus with China and the USA. Do you think it's going to turn into a risk rally, or do you think we might still be able to protect ourselves? Write it down below. I'd be curious to know. It would definitely be interesting. So let's take a look at the whole thing. What happens, of course, if two such countries come to an agreement again? Yes, that's right. The gold price naturally drops down. Currently, this is our risk management. What does risk management mean? The green box would be the buy box or the purchase box to be able to buy gold again. That doesn't actually look too bad in terms of pricing. If you go in, we would have another low point there, but then pretty much everything would start running well again. That would mean the Russia-Ukraine war would be over, all tariffs would be gone. You still have the dollar risk, so gold would still remain strong. But to fall down here, it would actually take quite a lot. Certainly not at the moment. Is there a chance to move further up? It remains that the 0.5 level stays here at $4,218. Then I would have here for now the target of 4.3 to 4.385. There are actually speculators at the moment who make up numbers off the top of their heads, which I do not endorse. The idea that gold will be at $12,000 by the end of next year doesn't make logical sense to me yet. From a psychological level, I just don't see it yet. At least from a technical analysis perspective, I can't sign off on that either. It would actually have to turn into a global war for people to buy more gold. On the other hand, you have to say, if there is a world war, most of the gold is somewhere in New York. So, also not exactly ideal. Then suddenly there will be an expropriation of the gold held by nation states. I don't know. That would be interesting too. Well, yes, Bitcoin's dominance remains at about the same level, more or less. So we're still far from an altcoin season. There's really not much to discuss about that. On the 4-hour Bitcoin chart, we've broken out of the ascending triangle, which we talked about. We've marked that out well. We've now reached resistance 1. You can really see here how strong or important support and resistance are. That's something we also teach in our masterclass. If you're really interested in learning how to trade the way you learn from books and not just from YouTube videos where you can actually learn in a sustainable way, then feel free to join us and learn how to do it the right way. Well then, will we manage to break through the resistance? This is a very important level at $116,300. Then it would go up towards $117,200 to just under $119,000. After that, there would be another correction wave, or we break down here and fall lower. Currently, it's a bit stretched out, so we need to take a closer look. Here, that would then be actually the pullback would already be at the breakout level, but the 0.5 is, of course, also important. $112,623. That's roughly where we saw the liquidity, where I said it would still make sense. There are still a lot of orders to be picked up, down towards $109,000. That's also where support 1 lies, so you can see that quite clearly. And then we also have risk management, that it could go a bit lower, down to 102,000, 104,000, something in that range. That would be our risk management. But for now, it looks good. So now, of course, the question arises, if I'm already in, would I take profits? Ideally, you would take profits at $117,000 to $119,000. Of course, you could also take out 10% at the resistance to cover fees. That's also an optimal move. If you get pushback, where do you get back in? That would be my suggestion. Starting from $112,600, stagger your entries and go lower. And never worry if these entry points don't get filled. You see, we always have wave movements. They never just go straight up. So wait it out, use the opportunity, and enter trades smartly. Otherwise, join our Academy Club. There you'll also learn how to enter calmly and patiently. We have over a 96% success rate, so feel free to join us. So at the end of the day, the ending is actually at $122,600. It could get exciting and interesting again there, but I would rely on the JayWave. As I said, if we break through here, then this is where it happens. FOMO sentiment, yes, it could shoot upwards. In some cases, it could even go up to $120,000. That's also possible. With Ethereum, we've set up a similar system. Here too, the end target has actually been reached. Now we're building again, like this. The fascinating morning star is forming. That could also happen again here, if yes. We're also in the MISD here, by the way. The RSI is overheated. So for Bitcoin as well as for Ethereum, not even mentioned, but of course it's falling. Maybe it's also very important, if we want to support your sense for this, again briefly, I think it wouldn't be such a bad idea to talk about it for a moment because it really is very, very important. For Bitcoin, it's generally important that we always stay above the IMA 300 and 200. That means we're in a growth phase. Of course, if we fall below that, then we break down into this area. Right now, we're in a good position. We had a bullish cross here that pushed us upward. And if we manage to perform up here again, the upward trend will start again. Otherwise, we would fall back and collapse again. Of course, you also have to be careful because from a nice breakout level, like an ascending triangle, something rather unpleasant can often happen. And that would be a rising wedge, which at its peak increasingly signals an ascending wedge, which is a bearish signal. We don't need to talk about that yet because A, the candle is still running, and B, I would definitely wait for today to finish. We can take a closer look at that tomorrow. So with Ethereum as well, good, very well prepared. That would be the pullback here. At $4,050, you can round it up if you like, then back down to a level of $3,900. So from this point on, you can enter long positions very, very well. Would I short this scenario right now? That's actually a good question as well. So a professional trader, myself included, and of course many, many others, would short this with minimal risk. That means if I build a long position, it is at least twice as large as the short in such a situation. But of course, we have this risk rally, which gives us opportunities to make money with shorts as well. But I really only recommend that if you fully understand the geopolitical situation, if Donald Trump, let's say, does something, for example, and if a sack of rice falls over in China, what happens then? You know what I mean? You really need to understand that because you have to be able to react pretty quickly. And whether you can actually do that, well, that's another question. So for you, it's generally important to keep an eye on this, observe it, and stay on track. But in my opinion, you should also here as well. Keep the EMA 300 and 200 on your radar. As I said, the correction to the downside, there are some very nice entry opportunities. Take advantage of these chances. Otherwise, as I said, if you're unsure, feel free to join our Telegram group and discuss with over 4,000 traders, or even join the Academy Club, where there are over 300 people who understand much more and, of course, are more involved. They work with it, exchange ideas, and so on and so forth. There you'll get much, much more. Yes, that's it from my side. Otherwise, I wish you a wonderful trading day. I've said everything that needed to be said. Feel free to write your thoughts in the comments below. Don't forget to show some love and share the video with your friends. I'm Raul saying goodbye from Switzerland. Stay healthy and see you in the next video.